What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing the price of Bitcoin. We're looking at the daily chart, and what you can see is that today Bitcoin has dumped down to actually just below 23,000. We saw price action just below 23,000, and we are now back above 23,000 as I'm making this video. We are testing the most critical part of this trend, which is the upward sloping trend line. The trend is your friend until the end of the trend. And right now, as I'm making this video, we are still maintaining the trend. If Bitcoin ends up closing dailies below this trend line, that could indicate weakness and that we're headed down towards 21,500, a break of the trend. If we hold this, then we may see further continuation into the rising wedge pattern as we move into March. Before we get started, be sure to smash the like button and subscribe to this channel. So a lot of people were wondering, why is Bitcoin dumping today? Well, the S&P 500 is retesting the critical over 1 year long downward sloping resistance zone. We have had a breakout of the macro downtrend for the S&P, and now the S&P has a chance to confirm that it is actually shifting into a bullish trend. By holding this zone, we'd be testing previous resistance as new support, and that would actually be bullish confirmation. If the S&P falls below the resistance, that could indicate that we may actually continue the bear market and that this was just a big fake out. So this is huge, guys. We are at really the most critical point in markets of the year thus far. The S&P needs to hold this zone. Now, something else I've been looking at recently is Bitcoin seasonality. And I wanted to know, what is Bitcoin usually doing at this time of the year? And what can we expect in the following months? If you look at this table, it displays Bitcoin monthly returns. We have all the months of the year listed on top, and we have the years on the left, and we have the average monthly gain, and below that is the total collective percentage gain for all the months together. The first thing that stands out about this table is that September is the worst, with a negative average return and a negative collective return for all of history. September has actually produced negative returns for Bitcoin if you add up all the years. So September is just clearly the worst. According to this table, November is the best, nearly 40% average return and 548% collective return. So I just wanted to point out some of the worst, some of the best. And where we are now is February, which is an average return of 13%. And throughout history, February is majority closing bullish. And then next month, March, majority of the months are actually negative next month, with an average return of 8%. And a total return of 114%. So seasonality suggests that we would actually close out this month positive. This month, it opened at 23,700. Seasonality suggests that we would actually bounce here and in the next few days close up at a positive zone. So this is the opening of the month right here, 23,700 roughly. And so seasonality actually says we bounce from here into the end of the month. And then interestingly enough, March suggests that we should really not expect too much according to seasonality. 8% on average, total percent 114, with majority of the months being losers, right? There's a couple big winners which offset the average there, but majority of the months are actually negative. So with that in mind, seasonality would suggest that we actually continue up into the rising wedge going into March. And then in March, we hit the top of the wedge and break down, and then maybe consolidate throughout the month of March. And based on seasonality is something along these lines, right? Okay, so then let's go back to this chart and we look at the following month, April. April is the second best month of all time. 36% on average, 500% total gains, with majority of the months being winning months. Of course, we have one big winner in there from 2011, which does kind of skew the data. But if you just go based on what the data is saying, it would suggest that April would be very bullish, which means that we go up into March, pull back throughout the month of March. And according to seasonality, we look to go ballistic into April. Right? Second best month of the year, April. It's not as much of an opinion as it is just what the data is telling me. Something along these lines, I think, is what we should expect if we're going based on seasonality. This is not a guarantee. This data doesn't guarantee any sort of returns within any sort of month. It's just an average. It's just statistics. It's just probabilities. Though I actually went to TradingView and created my own indicator. It's not just labeling months based on being bullish or bearish, because you can see some of these have a red dot plot, even though they closed green. Essentially what this indicator is doing is using seasonal returns by the month and also using a regression line to give a more accurate reading. I have not published this indicator yet. I'm still working on it. It's not perfect by any means, but there is something to say about it. What we can see is that every time we have a bear market, the worst part of the bear market begins in June. For example, if you look at 2011, June was the top here. We topped out in June, dumped into January, and then bounced into February. Go over here to 2014. This indicator flipped red. The red bar appeared, indicating bearish seasonality. And from June, that was the month it flipped red, into January, and then bouncing into February and bottoming. And then over here, 2018, June, it indicated would be bearish according to seasonality. We ended up falling into January and then bouncing into February. If we go over to the right, the data is not perfect, but the most bearish month of 2022 was June. June was the worst performing month, so kind of followed seasonality in a way. And we bottomed in November, 1 month off of the usual bottom zone, and then bounced into February. Very close in terms of seasonality. One thing that is really consistent is the bear market seasonality. The bear market seasonality, the months are really aligned. They're really following. If you go to the table here, you can see from June on this table, you can see that the numbers start to tick down into September. And then we have major rebounds in October, November. And if you just looked at this table, you would almost think that September would be the bottom and that we would be bouncing and, recovering October, November. That would be like the first thought you would have when you look at this, but that's not the case. This indicator shows it a little different. Okay, so then when are we usually bullish? After February, things get really bullish historically, guys. After a bear market and then we enter February, in 2015, we went sideways and then up. 2019, we just went up from February. So the question is, is it going to be more like 2015 where we go sideways and then up, or are we just going to go straight up? That's the big question. Seasonality does suggest that we've bottomed and that we're looking to recover, though of course it could take longer if the S&P doesn't perform well. But if the S&P performs well, then we might recover faster like we usually do after a bear market. But overall, seasonality would tell us that the likelihood, the probability of a bullish recovery from this point is very high. Also, seasonality tells us that in April, we can expect a pretty big return, with March being somewhat neutral. And that brings me back to the current Bitcoin daily chart. This is what is most likely according to seasonality. It could be wrong because seasonality does not provide any guarantee, but this is at least something to consider. This is the daily chart. Bitcoin would basically bounce from here, top out somewhere around 26,000, return back, possibly even give us a negative return in March, and then go very bullish into April. Hope you guys enjoyed this video. Smash the like, subscribe to this channel, and I'll see you all in the next one.